for joining us. Today we're going to talk about what is, I think, terrifying is maybe too strong of a word, but the numbers and the accounting and the financial management of nonprofits is something that very few people come into this work with any sort of familiarity with how how you should look at information, how even to read financial information. I think I always show this slide when I do these kind of talks because this is what I think what happens to a lot of our brains. We you kind of glaze over and can't process all these numbers at the same time. So we're going to talk through some strategies about how to understand what financial numbers are telling you about your organization, and some best ways to prepare financial information for boards or for grant reports or for fundraising proposals and things like that. For the duration of this meeting, there's a chat window that you'll see right up at the top right-hand screen. So whenever you have questions about what I'm talking about, please just write them down in that chat window, and then I can make sure that we do address any specific questions that folks have. We do have a fairly small group, so I would encourage you to even if you've got fairly specific questions with your organization, that we'll have an opportunity to address those, and everyone else can kind of learn from your situation as well. So a little bit about my background, and those of you who were here last week have heard some of this. My background is in starting and running small arts organizations on the East Coast. I did some fundraising and sort of alternative grant making. A lot of it stems from an arts group I was running that wasn't eligible for city funding. So I got mad, and then I made my own kind of arts council and funded a lot of different projects through that, and kind of help the community think differently about grant making and the role of these sort of social organizations. I also have a master's degree in accounting, which I got so my mom would stop giving me a hard time about not having a graduate degree. And years down the road, these things have sort of synthesized, and I've seen how that background can be helpful, and my stories and experience, both from being sort of on the ground in the trenches with new organizations and no staff and all volunteers, and seeing the other side of it, consulting for large organizations, how that can be helpful in helping new and small organizations understand and think about their finances. So starting with why numbers are important at all. The main reason why we use numbers and why we rely on financial numbers in particular in nonprofits is that they help us make decisions. They help us understand our organization, understand our customers or our market, and help us figure out how to do the work we're doing better. Numbers and financial numbers are unbiased. I always say you can't be mad at a 4 because it is not reflective of how you feel about it. It's unemotional. It's just conveying information. It's a rational system. So 2 + 2 is always 4. It's kind of nice to have some rules that work out in the world we live in, and they're transferable. I mean, numbers are a language that once distilled, you can then compare numbers in one area to numbers in another area, and learn things about both areas through this language of numbers. Ultimately, our goal with numbers in the nonprofit sector is how do our numbers help us tell the story of our organization, the story of the work we're doing, the successes we have, and how we're growing and how we're continuing to meet the challenges in the community that we're focused on. So, if numbers are so great, why does all of this financial reporting world have to be so complicated? A lot of this stems from, and if you keep joining us for the rest of the presentation, I'll at least acknowledge when I'm going to do a little soapbox thing. The nonprofit sector is hard from a numbers perspective because as an organizational structure, it kind of doesn't make a lot of sense. Nonprofits tend to be intentionally biased. There's a direct change and a direct outcome that we're looking to achieve. And so we do take a biased position. They're often really emotional. The causes that we're working on, have a lot of emotional strings attached to them. It's not a rational system at all. And we talked about this in the first week a little bit. In nonprofits, your money comes from one group of people, and you tend to be working with a different group of people or a different part of the community. And that creates an inherent sort of dichotomy that's hard to manage. And it's hard to then use numbers the same way that for-profit businesses and in other sort of research organizations can use numbers to communicate. They're also, it's not always transferable. The numbers you get and how much it costs to affect the health outcomes of a child are not necessarily relatable to, helping, the job prospects of, folks coming out of prison or something like that. It's hard to communicate between organizations using numbers. So that groundwork, I think, is important just to understand why we rely on financial information so much in this sector. And it's because we don't have a lot of other great numbers to work with. In for-profit industries and, airline industries and retail, there are sort of standard metrics and standard numbers and standard outcomes that they can look at that are numbers based. And in nonprofits, we don't have those. I think that's kind of the future of where everything is going in this sector, is towards a more data focused and data driven decision making about, return on investment, let's say, impact per dollar, things like that. But we're in the very kind of beginning of that trend. So right now, the only numbers you really have to work with and that everyone is working with are these financial numbers. So that's why, this work is important and understanding what the financial numbers mean, because we tend to rely heavily on these in the sector. So the basics that we'll talk about starts with some terminology that I think a lot of us are probably already familiar with from, our normal lives of checkbook balancing and credit cards and things like that. So cash is the first one. Cash is the most important asset that an organization can have, because you can spend cash on anything. It's for, especially in small organizations, cash and what's in your bank account has a large, impact on what you can do operationally. I use the word assets in describing cash. These are assets or things that can be turned into cash to fund operations and to fund programs. So, a chair is an asset, or a receivable, a grant that is coming, in the next couple of weeks. Those are all things that will be or can be converted into cash and used to benefit the organization. So assets are a group of things, and cash is one of them. Liabilities is sort of the opposite of an asset. A liability is an obligation that you have to either pay money to someone or pay money in the form of services that you owe someone. So, credit card bills, things like that. Those are liabilities, things that are going to reduce your cash at some point in the future. And sometimes we classify them based on how long it's going to be before those liabilities reduce your cash. Income and revenue. This is, money coming in the door. The one thing that we'll talk a little bit about this in this presentation, nonprofits tend to use slightly different words for some of these things. I've always liked to use the for-profit language, because I think that, the reason that the industry doesn't like to use for-profit terms is kind of because they don't want to admit that kind of we're having to run a business that looks very similar to everyone else's business. So I'll tell you that in the instances where there's a different sort of nonprofit terminology for something, I'll tell you that. But most of the time, I'm going to use just for-profit words, because I think it's easier. I think it's cleaner. I think it's easier to understand. And there's no real benefit, I don't think, to kind of sugarcoating or being flowery about what our role in society is. We still have business to run like everyone else. Income and revenue. This is money, money coming in from programs, money coming in from events, money that comes in from donations. And income and revenue are used fairly interchangeably, and I've been doing this for a long time, and I've never really figured out any standardization of why we use one in one sense, or we use revenue in another sense. So, I mean, feel free to use whichever one you like the most, I guess, from these two words, but they mean the same thing. Expenses. So this is the opposite of income or revenue. These are money that you spend to execute a program, or to pay rent, to pay bills. Net assets. This is a nonprofit term that the other side is called retained earnings. This is a little bit more conceptual. This is the complete accumulation from the beginning of time until now of all of your revenues minus all of your expenses, and what's left in a sort of total accumulation of those operations. This is, again, in nonprofits, we use the term net assets, but it's basically, over the 10 years you've been in an organization, what's really left at the end of the day after all of those operations. And that's considered sort of an equity. In for-profit, we call that an equity account. In nonprofit, it's net assets. We'll talk about this a little bit more when we look at balance sheets and how that works. Anybody have any questions about these terms or terminology, or any other words that you've seen come up that maybe you don't know what it means, and you could use a safe space to ask those kind of questions? Okay, so we'll keep moving on. The next part of the basics that we're going to talk about is looking at the basic financial statements. There's two main financial statements that you will see anytime you present financials to a board, or anytime someone asks you for financials for a grant report, or for soliciting donations. Odds are they're going to ask you for these two financial statements. The first one is balance sheet, and the other one's an income statement. They both look at slightly different parts of the financial picture of your organization, and we'll talk about in each case, what they show you, what information they can convey, and then how you can use them best to sort of, again, tell the story of the organization and what you're working on. So first is balance sheet. This is another one that has a for-profit name and a nonprofit name. The nonprofit name for this one is the Statement of Financial Position, which again I don't really use that much because it's easier to call it balance sheet. Balance sheet is a statement that shows the current financial situation of your organization. It's a document and a statement that shows cumulative up to a specific date. So a balance sheet would show, all of the things you're working on, your assets and your liabilities as of a specific point in time. And it looks like this. This is how balance sheet is set up. So a balance sheet as of a specific date. What are the total amount of assets that the organization has, the total amount of liabilities, and then the computation of what's left after all of that is the net asset. So this is sort of like an equation. So assets is equal to the amount of liabilities that you have plus the net assets. So plus the accumulation of all of your income minus expenses from the history of the universe up until now. And that's why we call it ultimately a balance sheet, because these two things are supposed to balance. So here's a little sample one, and we can always check my math in these because I've done this presentation before and actually had the math wrong and then had to be embarrassed and then pretended like I did it on purpose, right? So that it was a test and everyone's supposed to see that. It looks like I did it right this time. So balance sheet as a specific date. So June 30th, 2018. On that date, we had $500 in the bank, $200 in furniture, chairs, something, desks maybe. And then our total assets is $700. The other half of the balance sheet shows our debt, so our liabilities, our net income, which is how much money we've made in this current period, and then adding that to how much money we've made net from the history of the universe up until now. And those two things will always balance. Those two sections, this 700 and then this other 700. And that's why we call it a balance sheet, because it's always supposed to be in balance. Does anyone have any questions on this or have seen this statement before? Okay, so that's kind of a really simple, version of what a balance sheet looks like. And now we'll look at and talk about income statements. This one's a little bit easier, folks. Most people have sort of seen this. It's another one that has a nonprofit name and a for-profit name. Nonprofit name for this one is the Statement of Financial Activities. Again, because we don't want to, if for some reason they don't want us to admit that we have to, make money to keep the doors open. Again, I just call it the income statement. Income statement is a statement showing the money that's come into the organization minus the money going out of the organization over a period of time. So whereas the balance sheet shows information at a certain date, the income statement is a sort of more of a timeline. So it shows over a period of time, usually a year, sometimes a month, sometimes a quarter. But it's what has happened over that period of time. And it's more like a live feed of the financial situation of an organization. So what's happening, as the organization is existing in time. So it looks something like this. And this, again, it's a period of time. So you'll always see a start date. You'll always see an end date. And it's pretty straightforward. Your revenues minus your expenses equals your net income. Net income in the nonprofit is another one that has a nonprofit term. This is change in net assets is the nonprofit terminology for this. Again, I just like the for-profit term because I think it is more logical and makes more sense. But just in case you see that, you'll know that basically means net income. So here's a really simple income statement. Again, you see a beginning date. You see an ending date. This is one that covers a period of time that's a year. Our revenues up at the top, minus the expenses that we have over that period of time, are what ends up with our net income, and or the change in net assets at the end. And you'll see how these two statements work together. The income item from the income statement actually can show up on the balance sheet to match, so that those statements are linked. It's hard in nonprofits when you look at the change in net assets terminology and the restricted versus unrestricted balances. I'll show you a sample later on of what's common in how these statements look like in real life. And you don't always see this link between the two statements because it's the math is a little bit different. But that's the basics of those two statements, and they are almost always together. Does anyone have any questions about that? Okay, great. So that's the really simple version of things, and it pretty quickly gets a lot more complicated than that, and ends up why accountants and things like that exist in the world, is that it does tend to get pretty complicated pretty quickly. We'll talk about some of the big kind of conceptual things that happen in financial reporting, so that you can be aware of them and kind of know what, be aware of some of the problems that you might encounter. So class-based financials, this is a fairly, it's a standard nonprofit way of looking at income and expenses. Mostly because when you get bigger, these numbers are reported to the IRS as part of a 990 report. But it's helpful in thinking about the income and expenses of the organization to think about segmenting expenses into different types. So this is helpful If you want to, if you, let's say you run two different programs and you want to, say that expenses from this area go to the first program, and then the others go to the other program. You start to get these what we call class-based financials, which are really helpful in comparing how things are going in different areas, and then where you're spending your money in the nonprofit organization. So I'll show you a little bit about what we do in the Tiny Opera House system to keep track of this, but this is a good thing to kind of get in the habit of thinking about, our expenses, were these program expenses or fundraising or management expenses. Cash versus accrual. So this is a problem that even people who've been doing this for a really long time sometimes get confused about. I've been in a lot of board meetings where there's some old board member who will say, "Oh, this is accrual basis and not cash basis," to make them sound smart or cover up when they made a mistake. There's basically two different ways of computing information that goes into financial statements. That's kind of like philosophies of when you report something, when a number really matters, and what kind of constitutes an actual revenue and an actual expense. So cash is the easiest, and I imagine most of you are thinking about your organizations like a cash basis. This is kind of like how we run our normal lives, right? You've got enough money in the bank to pay for things. The money in the bank is the money that you have. It's the easiest way to think about it. It's very clean. Something counts as revenue when you get the cash for it. Accrual is more complicated because in accrual accounting, you look at recording a revenue when it's earned, and that the idea of when something is earned can be very complicated. It's sort of like if somebody promises to give you $10,000, you kind of earned that money when they promised it to you, not necessarily when they gave you the check. So in accrual accounting, there's a constant dance between when something is coming in as cash and when something gets recorded as an expense or as a revenue in the financial system. I think that's a pretty good summary of it. Some examples of accrual, things like receivables. So in the example I just gave, if someone owes you money, you kind of earn that when it's owed to you. The same thing with payables. If you commit to paying a vendor $1,000 to rent a tent or something like that, you sort of have that expense when you committed to it. There's also things like depreciation. This is the concept where if you buy, say you buy a truck for the business, you're going to use that truck over a period of time. Depreciation, again, in the accrual sense, says that the expense of that truck should happen over time the same way that you use the truck over time. So instead of just expensing it all at once when you paid $5,000 for it, you cut that $5,000 up into a bunch of tiny chunks and show them every month going into the future. So that's another accrual. Deferred revenue, this is money that you're going to get eventually, that you report in financial statements now, when that obligation was created. So Tiny Opera House, especially for organizations that are new or that are small, we're big supporters of cash basis financials and cash basis thinking, because you save yourself a lot of time and a lot of headache and a lot of confusion, not only with you, but with the board, in communicating and understanding where you are with your financials. Up to a certain point, like big organizations, it starts to make more sense to use accrual accounting because then the numbers are bigger, and then you've got more support networks too. Like if you're a $10 million organization, you probably have some accounting people on staff. But for all small organizations or people that are kind of doing this on their own, we're big supporters of cash basis financials, and that's what our system is built on. Again, because it's much easier, it's much cleaner, it's much more rational, when you're just starting out. Okay, so the next big wrench is this idea of restricted funds versus unrestricted funds, and I've seen a lot of organizations get in trouble with this of all sizes. It is a unique thing to nonprofits. Um, it's the idea that somebody can give you money and say you can only spend this money on the program, the animal adoption program that you run, or they can say you can only spend this money on salaries for Joe, who's somebody who works there. Donors can give you money and also qualify what you're allowed to spend the money on. And that's called a restricted donation. It's kind of similar to grants. Grants can be restricted and often are, because you're applying for money for a specific purpose, and then they require you to use the money just for that purpose. So if you get a grant for $5,000 to do a certain program, you've got a responsibility both legally and from a fiduciary perspective in the organization to spend that money on what you said you were going to spend it on. So restricted funds, can only be spent for a predetermined purpose, versus unrestricted funds, which are money you could spend on anything. So with unrestricted gift of $500, you could spend on, salaries or consultants or taxes or whatever you want to spend on it. It provides it creates additional challenges in reporting and in keeping track of money, because you kind of have to put additional things in place in your systems to make sure that you can know how much money is left in restricted, how much money is left in unrestricted, so that you make sure you're spending the money on the things that you promised that you would spend them on. Does that make sense? This is a big one. It's something that, I mean, the first nonprofit I ran, didn't even know this was a thing, and like a lot of people got into trouble with having to then raise more money to cover money that I accidentally spent on something I wasn't supposed to. So I think knowing it and knowing that this is kind of the world of nonprofits, from the very beginning is really helpful. Any questions about that? Anyone have restricted funds already? Yeah, it's a great question. So, if depending on how your accounting system works, you can put it in your general checking account, because in your reporting and recording of that information, you'll basically tag that money as this goes to grant from the community foundation or whatever you want to call it, and then as you expend money on things that are relevant to that grant, then you do the same thing. You tag the expenses as relating to that grant, and that's how you can then run a financial statement that shows just that grant and what's happening with it, and then how much money you have left in it. I think an easy trick, if you aren't there yet, or you're still trying to figure out kind of how you're doing your financial system and your software things, is just open a separate account. So like a savings account or another checking account. You can usually do it, for free at whatever bank you're at, and then just put, restricted funds in a certain, in the savings account, and everything else goes in the normal account. I think that's an easy and cheap way to deal with it if you're worried that you might accidentally kind of commingle the funds and spend them on something, spend restricted money on unrestricted things by accident. But that's an easy way to, if you're worried about it, to keep track of it. You're welcome. Okay. Yeah. Yeah, technically you would still have the obligation if they gave you $500 to spend on something and it only costs $200. Technically, they still have a restriction placed on that remaining amount. It's usually no big deal to go back and send an email and say, "Hey, we did this great program. Your support is really awesome, and we did it, all because you were able to do it. We've got some funds left over. Are you okay with it if we, spend those on if we count that as unrestricted money left over?" And an email, some sort of documented conversation, because they still do technically have authority to dictate how that money gets spent. I mean, they gave you the money to spend it on one thing, so that the remainder is still technically restricted to that, whatever they imposed in the beginning. Donors are usually pretty easy about it, especially if the program went well. I would just send an email so that you have a little bit of a paper trail to show that, they release the restriction is the terminology, so that they release the restriction on the rest of that money. And I'm going to keep track of these, the questions in this sidebar. Restrictions for, I'll show you at the end. We're working on building a forum through the Tiny Opera House website for other people who are just starting nonprofits, and some of these questions I think can be relatable, and folks all over the country in different areas might find them useful. So all of these questions are going to kind of convert and make sure that they've got answers in the forum as we're building that. Yeah, I'll send it out later today. We're looking at a PowerPoint, so I'll send that out. We're also going to look really quickly at a sort of financial reporting template to see what these statements look like in the real world. And I'll include links to both of those in an email later this afternoon. You're welcome. Okay, let's keep moving on because I want to make sure that we have time for questions at the end or more. So those are just some of the complications. Again, it gets pretty complicated pretty quickly in this world. When you're just starting out, or when you are small, you can keep things easy, but it's helpful to know a little bit about where things can get complicated, so you can make sure to keep things simple with your reporting. Okay, so some advice on looking at financials and understanding what the information means, and then also on presenting financials. There's a pretty significant degree of art that can happen in how you use your numbers to communicate to either a board or someone you're applying for a grant. The numbers are kind of, will be the numbers, but how you show them to people and how you categorize things and kind of what statements that you share with people can really have a big influence in the story that you're telling. So we'll talk a little bit about that, both reading financials and in presenting financials. So reading financials, just a couple things to think about, and a lot of this, it just takes a lot of practice, just like kind of getting familiar with anything else. It's something that you get better at over time. One thing that's a sort of, I don't know, it looks kind of Zen sounding now that I see it on a slide, but a number by itself doesn't really tell you that much. If you look at something and it's the number 4 could be a huge deal, 4 could be a tiny deal. So you really learn the most information by relating numbers to each other. So if it was 4 this year and it's 1,000 next year, like that's a big change, and you learn the most information from looking at how numbers are changing over time, not just what the numbers are, if that makes sense. Where are things moving? What's the speed of the changes? How do the numbers relate to each other is really, where you're going to get the most information. Again, because an absolute dollar figure doesn't really tell you that much. But numbers, how one number relates to other numbers in a statement is what really can give you the best information. Just like that slide in the beginning with the 1,000 numbers, it's sort of terrifying. it's the way, especially when you're starting out, is breaking things down and kind of looking at a small piece at a time. If you look at a financial statement with 60 lines on it, it's hard to digest all that information at once. But if you focus in on let's say the asset section, you'll recognize some of the terms that you've seen before: cash, things like furniture, like things that you're already familiar with. You'll start to see those better if you kind of break it down into small pieces, and then look at a small piece at a time, see what it means, and then move on. Is an easy way to help from being overwhelmed. I can't ever remember this. It's either wine or it's numbers. Like you can hold 7 numbers in your brain at once, but that it might be flavors of wine. I can never remember. But there's some limit to your ability and your cognition to look at a lot of numbers at once. So that's why we always say just kind of look at it in small chunks, and then take it slow as you are getting the information from each little piece. And it takes practice, just like any other language. At this point, I've looked at a bajillion of these financial statements, and so I can read through them pretty quickly. But I can remember when things were complicated, and I had to really spend time with it. Take it slow and look at it in small pieces. We'll spend more time on the presentation aspects of financials and how you can use your numbers to really reinforce the message that you want to convey, either to your board, or if you're applying for a grant or applying for a donation, you have a purpose and a goal of what you want people to see in your numbers, and there is some ability to influence that based on how you present them. And part of that is the aesthetics. How the numbers look is important, how they're grouped, how many numbers you look at one time. We'll do a little bit of an example here with aesthetics. So I've got a personal preference against dollar signs and decimals, because in financial information, it's rare that pennies really make a difference in how you think about something. And things like dollar signs tend to clutter up the information, because if you're looking at this, these are actually the same information, but there's a lot fewer numbers over here. So it's going to be a lot easier for people to understand the numbers you're conveying, to really think about them. And you accomplish that sometimes just by thinking about the aesthetics of how your financial statements look. And in this case, we're actually able to save almost 50% of characters just by getting rid of decimals. Getting rid of things like 35 cents and other is never going to help anyone make a decision. It's not worth its space on this statement. So in this example, I just collapsed it up into a different expense. Office expense is usually a good way to put little rounding things like that. And it's even actually 47 and a half fewer characters, but I even got rid of the decimal in there because it makes the story better. Does that make sense? This is just a small example, but just to kind of get you thinking about how you communicate the information has a big impact on how people understand the information. Math is important. Like I said, I've made mistakes where the numbers actually don't add up to the numbers they're supposed to. It happens. If you had an experience in Microsoft Excel, sometimes there are hidden rows, and the formula is adding the rows, but they're hidden somewhere. Anytime I do financials in an actual presentation standpoint, I print them out and I take a little pen and I add the numbers up. I don't add them up by hand, but I add them up in a calculator independently of an Excel sheet or something that's got a computer formula, just as a final check to make sure that these numbers actually are adding up to what they're supposed to. We'll talk a little bit about allocations next week. Allocations is sort of a kind of next level way of really understanding what's happening in your organization. This is the concept of, let's say you're on as an independent contractor working for this organization at $5,000 a month. Part of your time is spent on administrative tasks. Part of it's spent on program number 2. Part of it's spent on program number 4. Part of it's spent on fundraising. So allocating is when you take one big chunk of expense and you split it up into smaller chunks. Oh, is that right? What, cutting it into chunks? Oh, okay. Is anyone else having sound issues? Okay. Let me see if I can do anything. All right. How about now? Okay. Yeah. Just yeah. Shout out if it's bad again. I can maybe reload this. We're almost done too, so we'll kind of keep going through. Um, So we'll talk about allocations a little bit next week. Anytime you're presenting financial information, it's important to consider the audience that you're presenting to. Again, whether it's your board, whether it's a grant report, what is the person looking at this information? What are they going to think about it, and what do you want them to take away from the information you're sharing with them? Some of that's in the detail. At board meetings, there's not nearly as much detail as you need to show them. I mean, to keep a meeting on track at boards, and we'll talk about this. We have a whole hour talking about board management and how to work with your board of directors. From a financial standpoint, they don't need to see how much money you spent on staplers in the third quarter of last year. Their job as a board is to take the big picture, look out for the kind of big future of the organization and to champion the organization with all their friends and get them to donate money to it. So how can you give them financial information that helps them, achieve their goals and keep the meeting on track? There's nothing worse than getting distracted and, you've got an hour's worth of stuff you want to talk to them about. And now we're spending 15 minutes talking about either stapler expense or why one number doesn't match another number. So it's all part of considering the audience and considering what influence you can have on, kind of getting to think, what you want them to think. I mean, what do you want them to focus on? There's a few examples of how, just to kind of think about how this could work. So if you wanted to convey and wanted them, wanted your audience to take away from a financial statement that you're not raising as much money this year as last year. So something you could show in that case, is this year's financials and last year's financials next to each other. And then, they can, in that presentation, we'll be able to see and give you a sort of a prop to have that conversation to show them, where fundraising is year over year. If board giving is behind projections, in your line items of revenue, you can show board giving as a separate line item. If you've got grant revenue, donation revenue, you can call things out based on and draw attention and focus to things based on how you organize them. So maybe instead of showing all revenue as one line item, you show a couple different line items so that they can see where board giving is relating to this year versus last year. If you want to highlight differences between different programs, showing financials that do kind of different columns next to each other for those different programs, can highlight issues that you want them to see. So these are just some examples. Well, they'll be in the presentation. Again, I think the tendency is always to show more detail than you really need. But if you think about, how you want your audience to interpret the financial information you're sharing, and also, there's a decent chance that the board doesn't really even understand what to look for anyway. So your role not only as, preparing the information or working with your bookkeeper or whoever's doing the information, preparing it for them, and then also helping them interpret, and understand, what it means and what they should be looking at. A couple ways that we can help with Tiny Opera House. Again, we've got another week. Next week, we're going to talk about more in-depth financial planning in terms of like budgeting and cash flow stuff. One of the challenges with financial information in financial reports is it's already happened. Everything that's in a financial statement has already happened. So you can't really do anything about it at this point, right? So your balance sheet as of June 30th, June 30th is passed, and so nothing you do is going to change how those numbers look. But where you can have an influence is, numbers that haven't happened yet. So things that show up in budgeting and projections and things like that. We'll talk about those two things and how they interplay with what we've learned today. I'll share with you, we have a financial reporting template that I use as kind of a guide in preparing financials that shows kind of how these things can look. I'll share that with you in email. We've got some other things like that on the website, other blogs and that are talking about financial management, and also other templates that are available. We do have office hours, and it's been nice to chat with some of you this week that followed up with me after the presentation last week. I have a couple hours blocked off every Tuesday and Thursday to just kind of be available for folks that have questions and want to talk about specific things with their organizations. That's a link that I'll share with you in the follow-up email as well. This forum that we're building, I may send a link in the email today. Otherwise, I'll follow up next week. But this is our attempt to gather common questions and common things that people are facing with organizations now, or in 6 months when somebody has a new organization, that the questions and answers to things that you're dealing with can be helpful to other people. We're starting to collect those and build sort of a resource that's always available for folks. And we do have, the software platform that we have built does this financial management piece really well, and does have sort of built into it these best practices of class financials and grant reporting and restricted versus unrestricted funds. So if you haven't yet figured out how you're going to track your financials from a software perspective, this is something that I'm happy to set you up with a demo to click around, or No, this is our platform that we have with Tiny Opera House, is our software suite that we have available to help small and startup nonprofits manage their financials and donor relationships. I'm not sure what unified platform is. Where have you heard that term? Uh, yeah, Yeah, so we've done some of that, and this is our software product. I haven't called it a unified platform, so that may be a different vendor's terminology for it. But this is kind of how our platform looks. We sync with bank accounts and credit cards to pull in all this information and then make the bookkeeping really easy. It's sort of a question and answer based bookkeeping approach to getting this, and I don't want to spend too much time on this, but if it's something that you're still looking for a way to keep track of donors and your financials, and this can automatically build a 990 for you at the end of the year, so you don't have to pay an accountant to do it. This is something I'm happy to show you and talk about how this can be helpful to getting started with a good data structure. Okay, so and you just send me an email or click on a link in the follow up about setting up a demo, and we can talk more specifically about that. Okay, next week we're going to talk again more in depth about the kind of future financials. Again, with the idea, how how can we look at numbers that we can actually do something about versus, just kind of understanding what happened in the past. The other side of that is, of course, how do we take these numbers and move them into the future so that, we can make changes and kind of adapt to things as they're happening. And that's, budgeting, things like that. I'm sure, if your boards haven't asked you for a budget yet, they will at some point. So we'll talk about, best practices for that. And I'll give you some template resources for that as well. Any questions? Okay. So Mike says, is talking about in the chat window, the bringing together MailChimp and bank accounts and things like Eventbrite. So that's one of our big focuses with our software platform is, how do we pull all this information together across different things? MailChimp is great at sending emails, but it doesn't communicate well with QuickBooks, and QuickBooks doesn't communicate well with Eventbrite. So we've built a sort of lean and nonprofit focused way to pull that information together and give you everything you need to run the data side of your organization. Any other questions about the financial reporting or anything we've talked about today? Okay. Sure. Yeah. So I think it's a great question and a great point. I think if in the agreement that the donor is making when giving you the money that already has that concept that if there's extra money left over, we're going to use it for something else, I think that would probably cover you, as long as you can document that you are your first spending of that money was on the program or the area that the donor intended to give money to. I think, and if you haven't done that, but you are looking at sort of like a pool of donations that are all going to a specific program, I think you can also allocate expenses kind of to donor one first, and then donor one's money gets completely used up, and then donor two, you start allocating expenses to that donation, so that at the end you can be a little bit strategic too of thinking which donor is most likely going to be okay with you relieving that restriction, and then leave that one as the one that has a balance left. So depending on those relationships you've got with donors, because that's perfectly fine, and is down the road of just being strategic on this donor gave money for that. I know that they really care only about that, and they're might be grumpy if I ask them to change that restriction. So I'm going to spend their money first and then move on, so that if there's a balance left, it's someone that you're more comfortable with the idea of asking to relieve that restriction. But I think putting it in the initial agreement is a great idea too. It's I mean, a lot of it's just the idea of donor intent. So, like, what did the donor intend to spend the money on? If they gave you money knowing that that you said you were going to spend it on something else, if there's money left over, that evidences their intent, because they that was the agreement that they used to make their decision about whether to give you money or not. So I think that would be fine. And in any case, any of these, that if you're not sure you're doing it the right way, just document it as much as possible, and you can do that through email. It doesn't have to be anything too complicated, but just so you can have a picture and a narrative of showing your understanding of what the donor intended to do, and your treatment and respect for honoring what they're intended to give money for. Any other questions about anything that, or any other financial topics we've talked about? Okay. Well, again, thank you so much for being here with us. This is the second of an 8-week series that's talking about not just financials, but all aspects of starting up and managing an organization from the beginning. Next week we'll talk about financials. The week after that, I think we start talking about branding and marketing, how those two things work together, and how to get the most sort of brand value and create brand value when you're kind of just starting out. This is my contact information. If you've got specific questions or want to follow up with anything, you can also follow up to the emails that I sent. We use an email service just to keep track of everything, but when you reply to those emails, they go to my individual, personal business email address. So, you are talking to a real person when you respond to those. And I'll send follow-ups with the materials, and look forward to chatting with you all soon.